Hi shareholders, welcome to CapitaLand's EGM and Scheme Meeting. I'm Chee, the Group CEO of CapitaLand. Today we bring to you two resolutions for approval that will change the way we grow our business. For the benefit of those who are hearing this for the first time, please allow me to spend a few minutes to recap why we are doing this. The current CapitaLand is made up of three strategic growth pillars: development, fund management, and lodging. For our development business, we believe that it will be beneficial for it to be held in private hands. From land acquisition to designing, developing, and getting an asset ready for operation, the development business requires greater flexibility to pursue longer gestation and capital-intensive projects. The public market views such real estate activity as slumpy and less predictable, which we believe could be one reason why CapitaLand has continued to trade at a discount. On the other hand, the investment management arm of the business, which includes fund management and lodging management, tends to be much more capital efficient and generates recurring income. The visible and recurring fee income is one of the reasons why real estate investment managers tend to be more highly valued by public markets than developers. The evidence is on this slide. If you look at the green lines, which represents real estate investment managers or RIMs, you see they tend to trade at a healthy price to NAV or forward price to earnings ratio. In contrast, when you compare the orange lines, which represent developers, you'll start to see a material difference in the NAV and earnings-based metrics. Because CapitaLand is a diversified real estate company, you can see we are somewhere in between in the form of the blue line. If we could get CapitaLand to gravitate towards the green line by illuminating the investment management business for public markets, we believe it represents a credible and favorable unlocking of value for CapitaLand shareholders. We are therefore proposing to consolidate the fund management and lodging management platforms and listing it by introduction on the Singapore Exchange as CapitaLand Investment. The development business will be placed under private ownership to be fully held by CLA Real Estate Holdings, a wholly owned subsidiary of Temasek Holdings, on completion of the scheme. We believe by doing so, we will be able to sharpen the unique value propositions of both the investment management platform as well as the development business. Since we announced this restructuring, the share price performance of CapitaLand has been quite positive. Pre-announcement, CapitaLand was at Sing dollars 3.31. We are now trading at over 20% higher, a level we haven't seen in around 10 years. Moving on to the construct and consideration breakdown for this restructuring exercise. Eligible shareholders will receive Sing dollar 0.951 in cash and 0.155 of CICT units for every CapitaLand share they own. They will also receive one share of the to-be-listed CapitaLand Investment for every CapitaLand share they own. Based on CLI's pro forma NAV as at 31st December 2020 of Sing dollar 2.823, as well as the 1-month VWAP of CICT units as of the last trading day of Sing dollar 0.328, the total implied consideration per CapitaLand share is Sing dollar 4.102. We are seeking shareholders' approval for this restructuring exercise, and they include approvals for the scheme of arrangement, as well as a capital reduction and distribution in specie, or DIS, which are principal features of the scheme related to the distribution of CLI shares and CICT units. Both resolutions are interconditional. In addition, the offerer, CLA in this case, will abstain from voting on both resolutions pursuant to SIC's ruling. Now, let's take a look at CapitaLand Investment, CLI, which we are proposing to list by introduction on the Singapore Exchange. The column on the left-hand side is starting with our fee income-related business. We manage 6 REITs and more than 20 unlisted funds and have approximately Sing$ 78 billion worth of funds under management, or FUM in short. This also includes lodging management, which is synergistic with the fund management platform. Taken together, this represents a capital-efficient business model driven by recurring fee income generation and healthy margins. On the real estate investment side, on the right, we have stakes held in listed REITs and unlisted funds. This aligns the interests of our fund vehicles with our own to drive ongoing value for our unit holders and capital partners. This part of the business also comprises direct holdings in Sing$ 10.1 billion of investment properties, which is a pipeline of potential assets which can be monetized or converted to FUM in the next 3 to 4 years to grow our fee income business. CLI represents a total of Sing$ 15.1 billion of NAV, generating Sing$ 1.3 billion of EBITDA in FY 2020 on a pro forma basis. Next, I would like to state what we see are CLI's key competitive advantages. Here are the top 5. Firstly, we are an Asia-anchored business with more than 80% of our real estate AUM in Asia. CLI will also be one of Asia's largest REIM and one of the largest listed REIMs globally. Secondly, CLI comprises full stack of investment and operating capabilities. At the top level, we earn fund management fees, and going down the layers, we also manage well over 300 commercial, integrated, and new economy assets globally, as well as over 120,000 lodging units, allowing us to earn various forms of operating fees. Number 3, we have a proven track record in investment management. Our FUM grew at a 3-year CAGR of 15%, and our fee-related earnings, or FRE, grew at 12%. In lodging, we are also making good progress and have grown lodging units under management at a 3-year CAGR of 20%. As we scale, we will earn more fee income and become more ROE accretive. Number 4, despite the fact that we will be separating into 2 companies, we are determined to ensure that the CapitaLand ecosystem will be maintained. Our sister company, CapitaLand Development, will be part of our ability to deploy capital, share talent, share technology, and share overall resources to enhance access as well as the performance of CLI. CLI has also secured a reciprocal right of first refusal for assets within CapitaLand Development once they are stable and are ready to be monetized. As at 31st December 2020, this constitutes Sing$ 7.6 billion of real estate AUM sitting on CapitaLand Development's balance sheet. Last but not least, CLI will be able to hit the ground running with an experienced leadership team, hosting over 20 years of relevant experiences. They will be supported by over 260 investment and asset management specialists in our key markets. In terms of growing CLI going forward, we will undertake 3 key strategies. The most important will be to grow our fund management and lodging management platforms, as these are the 2 key pillars of our fee income growth. Complementing this strategy will be a continued focus on being very disciplined in our capital recycling. For those of you who have been following us, you will know that we have been able to recycle approximately Sing$ 3 billion in capital annually. We will look forward to continuing that process, and we have actually already surpassed this target for 2021. By maintaining this discipline, we look forward to free up capital and debt headroom for potential inorganic FUM growth. My last slide aims to give you a sense of CLI's growth. We are currently at Sing dollar 78 billion of FUM, having grown at a CAGR of about 11% over the last 5 years. Continued growth of our fund management and lodging management platforms will add to the organic growth bucket. We intend to sustain this by ensuring we continue to support our REITs as well as through seeding of new private funds going forward. Next, we have approximately Sing dollar 10.1 billion of real estate AUM sitting on CLI's balance sheet. We'll look to monetize or convert this into FUM over the next 3 to 4 years. In addition, we also talked about the reciprocal right of first refusal with CapitaLand Development earlier. Assets sitting on CLD's balance sheet are earlier in their incubation cycle and require more time for them to be ready for monetization. But nevertheless, they are potential future pipeline assets for CLI or CLI managed vehicles. Lastly, we will also look to evaluate strategic acquisition. Similar to what we had done with Ascender Singbridge in 2019, ASB had allowed us to implement a step change to our funds business, giving us access to new economy sectors and India as a new core market. We will have capital readily available as we monetize our on-balance sheet assets and execute our capital recycling strategy, and we'll be on the lookout for more of such strategic acquisitions to further accelerate CLI's FUM and FRE growth. On the right side of this slide are some of the targets we are looking to deliver. With our current laid out plans to grow FUM, we are targeting Sing dollar 100 billion of FUM by the year 2024. We are currently at around 123,000 lodging units. We want to reach 160,000 keys by 2023. At this scale, we expect the lodging management platform to start contributing more meaningfully to the earnings profile of CLI. Last but not least, we want to improve our ability to generate fees. This is measured by the FRE FUM ratio. Historically, we have been at around 40 basis points on average, and we intend to focus on continuing to improve this ratio. Many of our investors have told us that the dividend policy is important. We'll look to maintain the dividend policy for the time being, and we'll undertake a review when there is greater visibility of a more normalized operating environment in the next 12 to 24 months to ensure that it accurately reflects the cash-generating nature of a REIM. This will also have to be balanced with our plans to grow FUM. Certainly, we wish to deliver a meaningful return on equity to shareholders. CapitaLand had achieved 10% ROE in 2019, and CLI will be looking to continue delivering ROE that is greater than our cost of equity. Last but not least, it is important to mention that the independent financial advisor, Evercore, as well as CapitaLand's independent directors have given favorable recommendation in respect of both resolutions. Evercore has called the terms of the proposed restructuring fair and reasonable, and our independent directors have recommended that shareholders vote in favour for both resolutions. The full text of the IFA letter and the recommendations of the independent directors can be found in the scheme document. We see strong rationale to sharpen our focus and give shareholders the ability to unlock value, both in the short term, as the share price re-rates, and in the longer run, as our execution of the CLI business allows our multiple to gravitate towards that of the best-in-class REIMs. We have an established set of key sustainable advantages that we believe will set CLI in good stead in differentiating ourselves as an Asian-based REIM compared to our peers. We also have an established strategy to grow our fund management platform, our lodging management platform, and sustainable target of capital recycling to ensure we are on track to achieve CLI's growth trajectory. That is to achieve 100 billion of FUM by 2024, 160,000 units under management by 2023 that will allow us to deliver sustainable dividends and ROE above the cost of equity for our shareholders. Thank you.